Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, today we again will take a look at the euro currency. Well, it really was a difficult choice what to choose today, because on the New Zealand dollar we also have the progress in our bread and butter trade. Today probably we will not talk on the Great British Pound, because today is a Super Thursday as we have discussed, and all eyes today will be on the Great British Pound, since today we will get the inflation numbers in the UK, and today we will get the rate decision from the Bank of England, and let's see what really will happen, whether it really will work. Our suggestion about the contradiction between the fundamental situation statistics that we really have and the public opinion, who expects the clear signs that Bank of England intends to raise rate in the near term. The public opinion mostly suggests that Bank of England will be the second after the Federal Reserve who will raise the rates. So let's see what really will happen, because overall situation right now points on the possible contradiction, and it really could be the big bearish move could start on the Great British Pound if Bank of England will not support the expectation from the that we right now see and hear in the mass media and the internet. So it really will be an interesting session today for the cable. Meantime, we will take a look at the euro currency. Well guys, in general, in the larger perspective, the situation looks relatively clear, because currently we see the confirmation of the our suggestion that we have announced in our weekly research in the euro currency, that in general situation is developing in a bearish direction. So what we would like to get right now, we have got, so you can see market has broken through the flag pattern and didn't return back inside of it. So we see this retesting, although yesterday we have expected, a couple of sessions ago we expected another leg up since market was oversold, but some events has happened that has put in the market and forced the market to show another leg down. This is mostly two major moments. First of all, this is another confirmation on the diverse steps that should follow in December from the Draghi that have made on the current week. And the second, yesterday EDP report and the comments from the Yellen, who said that mostly it says that it's definitely the Federal Reserve will raise rate in December. She has given a very clear hint that's probably it will happen. It's even hard to call as the hint. This is probably the conclusion that this should follow. ADP report was not bad, really, not superb. It was slightly below the expectation, but in general this was very close to expectations, approximately 180,000 in the private sector has been created. So it means that if there were no contraction in the government sector, and probably they were not, in this case we could say that non-farm payrolls should be greater than 180 than reuters poll of the economists expect, because just the ADP report has added 180,000. So it means that if the government sector will surplus to the private, it's definitely we should get something that's greater than 108,000. Maybe the simple maths also have been done on the market investors, and maybe this also works as the additional driving factor right now that presses on the dollar related currencies. So on the euro currency, guys, although on the strategical plan it works as it should, and we see the action in the direction that we have expected, in the tactical plan it seems not really simple, because every day some new events has happened and happens, and they are broken our trading plans that we have created in the morning. For example, here we have suggested that market could move higher, but market has failed and just dropped. Right now we have to prepare the new plan for trading. So what we see here, first of all, guys, besides the breakout of this flag pattern, market right now is not oversold. So consider this really free space till the oversold area. Second important moment, take a look. Market has broken through the major 618 fib support. So here it was the support, bounce up and breakout. In fact, between this area and that area, it's no significant support stand. I mean the fib levels. That's why it's relatively free area. Also, guys, take a look. That market here has passed through the 100% extension target from this A, B, C top. It's 100% extension. So market has hit it, almost passed through it immediately. So doesn't show any significant retracement here, and continue move lower. The next target logical stands at 1618. That corresponds to the 104, 105 area. It's right here. So that will be our next destination on the daily chart in the medium-term perspective. And we said that our action, our journey, road to the parity will be the step way. So the first one target will be after breakout 108, is where we stand right now. This area. Next will be 104, is right here, and only after that we start to move directly to the parity. Despite that the rate hiking by the Fed already mostly is priced in, there is two big differences in the policy that right now stands in the United States and in Europe, and simultaneously both chiefs of the central banks have announced opposite direction policy. So that probably makes additional pressure on the euro currency. Meantime, here, guys, we're approaching to the very significant support. This is the monthly pivot support one, this green line, and guys, this is very significant low. It's 108, because by taking out of this low, market will confirm the bearish development, because first of all it will erase this A, B, C bottom pattern totally. Second, it will create a reversal swing, because that's last swing to the upside. This market will create move down greater than this one. This will create the new reversal swing. And here, guys, it's very difficult solution that we should make, because from the one point of view, we need to search opportunity for taking the short position. But from the another point of view, we're approaching in a very strong support cluster. So besides of this significant low, we have the weekly monthly pivot support one, and relatively stands very close to the oversold area. So by taking the short position here, we could later meet with the opposite direction retracement. So this will be not very pleasant to us. That's why it's very tricky moment here. But signs that we see right now looks really bearish. So on the 4-hour time frame chart, guys, this is our picture that we have discussed. Here, recall what we have expected, that probably market could retest this area, but this hasn't happened. Also, guys, it's very important moment. Take a look that market has dropped below the weekly pivot support one, and it tells that this is probably the new trend, not just a retracement among the previous bullish trend. And from that standpoint, it seems that probably retracement for taking the short position, retracement to the weekly pivot support one looks reasonable. Because take a look, this is very significant drop on the euro currency. It's a very strong candle, and that also coincides with the target of this ABCD pattern that has been completed. This is also the fib support, former 618 fib support that has been passed almost without no respect on the daily chart. That's why since market is not at oversold, probably it will not show any significant upward retracement if, of course, we will not get the poor numbers on the non-farm payrolls release. If numbers will be approximately around the average that market expects, but if we will get the numbers around the average, we probably market should not show any deep retracements. That's why, from that standpoint, this area seems logical to expect some bounce for possible trying to take the short position, because returning back inside of the range of this candle, this will be a bit it will open the door for a possible deeper upward action. But right now we do not see any wash and rinse. We see just gradual action to the downside here, and that's why it's very difficult to make bet on any deep retracement, because any deep retracement should be supported and will be triggered only by the poor numbers on the non-farm payrolls. That's why that's the most closest logical area that could work as a resistance, and where we could think about taking the short position. And the second moment here is that taking the position here, this will give us some space till the significant support area that will let us to protect our position. So if even we will get the support here, our position will be protected, and even if retracement will start, that will not become the hazard for us. So that's why it seems that this is relatively logical action here that we could apply on the euro currency. So that's our current view on this market. We're approaching to the important date release, so let's keep watching.